Now we'll talk about the second type of strong bar that we need to be able to recognize, and that's the continuation bar. The continuation bar. Now, a continuation bar is a bar that closed higher than the prior bar high. And so in an up move, if price is moving up and we see a continuation bar, the continuation bars are marked at the number 2 on the chart. For instance, this, again, as we covered earlier, this bar made a higher high and a higher close than the previous 2 bars. And in addition, just as a side note, this is also a reversal bar. But in any event, this signals continued strength. And as long as we continue to make higher highs and higher closes, that market is signaling strength, and you don't have a sell signal yet, or if you're long, you may want to stay in until the market signals weakness. Yeah, see, this one was pretty close, but it did close higher here. It made a higher high, and it closed higher by a couple of pips, and we continued. But here, once again, at 2, we made a higher close and a higher high, so we continue. This bar showed weakness because it did not make a higher high or a higher close than the prior bar. So if I was in here, I would be saying it's time to get out at the close of this bar, because if you're in, you want to get out on the first sign of weakness. Then you can get in again when you see strength. But in here, we see this one, continuation bar, next bar up, continuation bar, higher high, higher close than the previous bar. And these two here, this is a continuation bar, and this one also is a continuation bar, and really all the way up there are continuation bars. So to summarize, a continuation bar is a sign of strength. That's the second type of bar you need to know or recognize to recognize a sign of strength in the market. It's a bar that closed higher than the prior bar high. Closed higher than the prior bar high. And so if we see a continuation bar and the market is moving up, we see a bullish continuation bar. So if we're thinking about going short the market, we got to get short out of our mind. There's no way we're thinking short right now. If anything, we're looking for our intraday 15-minute, 31-hour, whatever we use. We're looking for a long signal when we see a continuation bar. We're not going to look for a short signal until we see weakness. Okay, if I'm in here, or I'm staying in because this bar closed strong. I'm staying in at the close of this bar, and I'm probably going to get out at the close of this bar here, because this bar did not make a higher high, nor did it close higher. So that's a sign of weakness, and regardless of if my profit target is hit or not, it's time to get out to be safe. And then a way to think about continuation bars is this. Okay, for instance, we see this bar. If the market is strong, why wouldn't it make a higher high? Why wouldn't it close higher? I mean, your money's on the line, so you want to make the market prove itself. If you're strong, prove to me you're strong. Then I'll go long. If you're weak, prove to me you're weak. Then I'll go weak. Then I'll go short. Okay, next we'll talk about the third type of strong bar you need to recognize, and I call that the 50% bar. So next we'll talk about the 50% bar. Alrighty then, let's talk about our third type of strong bar, or our third type of bullish bar, and I call that the bullish 50% bar. The bullish 50% bar. And the bullish 50% bar closes 50% above the bar low. And as we talked about before, we would take the range of the bar, divide it in half, exactly in half, 50%. And if price moves down and that bar closes up 50% or above, that signals strength. That is a strong bar, even if it's moving down. And so you can say, think of a 50% bar like a reverse thrust bar that didn't quite make it on that particular bar. It was almost a reverse thrust bar, but not quite. And we look at this one. Okay, we closed 50% above the range of the bar, and that's a strong signal. We continue up. Okay, here this one's kind of close, but we did close 50% above the low of the bar. But this one, that signals strength per se, but we went down here, and there was some breaking news that came out here. But there are some signals, there are some things, some warning signs that would have told us not to be short here, and we'll see what I mean by that as we go along. So anytime the market does something different than we anticipate, it's really not going to happen too often, because we can see the warning signs early once we start putting our volume together with our MFI indicator. But anyway, okay, here's another 50% bar, signal strength. We didn't close below the low of the bar, this next one, so this still signals strength, and we go up a bit. Here, once again we close up above the 50%, and we go up just a bit. See, the thing is about strength and weakness also. If a bar signals weak, if a bar signals strong, that does not mean it's about to immediately go up. What that means is that it's trying or in the process of turning strong, but we have to wait for confirmation of that strength. And here, take this one. This is an example of what I mean. This bar did not close above or below the low of this bar, and we're going down. So to continue down, we want to see a close below the low of this bar, and we didn't get it. So that signals strength, but that does not mean that the next bar is going to go up. Okay, think of it like this. It takes 3 steps to turn. It takes 3 steps to turn, and that's just a simple law of physics based on the laws of physicality that we know right now. So when you look to see a bottom forming, you want to see 3 signs of strength on the turn up. And if you see a top forming, you want to see three signs of strength on the way down. Okay, here we go with that rule of threes again. 3 is a very special number. But in any event, you can get an idea of what I mean, that 50% above the bar low, or above the range of the bar, that's a signal for a long. You start looking here, not that you would enter here, but you start looking for your long signals on your intraday charts, your 15-minute or 30 or 1 hour, whatever that you're using. That's when you start looking long. The market signals strong, then you start looking for your breakout signal, or your pivot signal, or your moving average signal, whatever signal that you use. Let's take a look at this one here. It closed up above 50%, so that's a bullish bar. But now, because it's a bullish bar, it's not saying that price can't or won't go down further. It's saying that the balance of supply and demand at the close of that bar is up, is tilted up, and the odds are highly unlikely that it will close below the low of the prior bar. It may go below the low as a shakeout and form a reverse thrust here, but what we're looking for is a close below here. So once we see this one, this next bar it's going to be highly unlikely that it's going to close above below the low of this bar, or more likely the low of this bar, because these are inside bars. But this is your benchmark basically here. Okay, so most of the time the market does not turn on a dime. It gives us early warning signals of what it wants to do, and it doesn't always do what it wants to do or trying to do, but it would behoove us to stay on the side of the market that it signals us to do. The market is saying, hey, I'm strong, I want to go up, then we're only looking to go long. Now it may not go up, but if it doesn't, it's going to give you a signal, hey, I'm weak, and then you want to go short. So that about covers it for now on our strong bars or 3 bullish bars. And now we're going to talk about our 3 weak bars, or 3 types of bearish bars, and they're exactly the same as the bullish bars. Everything just works in reverse, going back down, and we'll talk about that next.